Hello, good day, guys. My name is Nick, technical analyst with Citradex, and today we are looking at the analysis on the currency pair, the Great British Pound to the United States dollars. Currently, we're seeing that pound sterling hold gains against the euro and against the dollar, held by strong weight figures. Now, pound recovering against dollar, pound has still been aiming for the 1.19 versus the euros, while wages too high to be consistent with 2.0 inflation. But we are seeing signs of weakness continue to build as unemployment rises. Now, the British pounds rode through a mixed set of employment market data that showed some rising and unemployment, but ongoing stickiness in wages meant that the pound to euro exchange rate edged a little bit closer. And also the pound to dollar exchange rate, meanwhile, rebounded from Monday's low to just above 1.32. Now, as market judges are still on the high to be consistent with an acceleration in the Bank of England's interest rates cutting cycle, these data for March come before the hike in minimum wages, and associated pay rises also pushed some momentum and indecision. And these data for March come before the hike in minimum wages, and associated pay rises also pushed through by the government in April, meaning next month's data should be a little bit higher. And such expectations are entirely consistent with the Bank of England's May decision and guidance that said that it would like to maintain a cautious approach to cutting interest. Now, however, there is certainly scope for an acceleration in rate cuts later in the year as unemployment rate rose to 4.5% in the 3 months to match its highest level since 2021. So although wages are still elevated, companies are having to grapple with the government's increased employment taxes, and the hike in minimum wages will also prove a headwind to employment. So if last month's labor market data hinted at an early response to upcoming employer tax rises, this month's figures will confirm a clearer weakening. Unemployment ticked up for the first time in 4 months by 0.1 percentage point. Payroll deployment fell by 33,000, vacancies dropped further, and the pound might have been higher were it not for these developments, potentially because markets can sense some weakness is in the pipeline. But nevertheless, the trend is key for GBP exchange rate remains higher for now. GBP USD is in a medium term uptrend, but a trade accord between the US and China announced on Monday opened the doors to a short-term pullback. But all the same, what we're generally expecting based on technical analysis, it's currently sitting on a very important resistance point. So we are going to mark out our important resistance point using our horizontal lines. We have this here, and we'll take another one and mark the very important support that was created yesterday. And then we need to understand that GBP USD is trading notably below the pivot level of 1.33062, which suggesting persistent bearish sentiment. Both the moving averages and oscillator indicators confirm downside pressure, with the price sitting around 1.32050, and the bearish trend remains intact unless strong reversal signals emerge. So we have entry direction, we have sell near, we have take profit, 1.31600, 1.31200, and stop loss at 1.32600. Whereas the Forex market is inherently volatile, we advise you to use effective risk management and stay alert to news events that could trigger unexpected price movements. So that's our technical analysis on today's currency pair GBP USD. Let's wait for a breakout, possibly from this upside, but if not, we're expecting ranges to happen. So for ranges, how to trade ranges, you buy when there's a sell market and you sell when there's a buy market, as simple as that. And that's our analysis on today's currency pair GBP USD. I remain your host, Nick. Bye for now.